The real problem is that most traders don't know when a strategy is supposed to work, so they apply the same logic in every type of market. If you ever said this strategy works sometimes but not other times, this video is for you. My name is Diogo and welcome to Price Action Concepts. Most traders think the problem is the strategy or the timing or psychology, but that's not actually the issue. In this video, we're not building a new strategy, we're building understanding. I'm going to show you how price action tells you what kind of behavior the market is showing, which strategy logic fits that behavior, and when a strategy has no reason to work at all. Once this clicks, strategies stop feeling random. Price action isn't about prediction, it's about measuring attempt and response. That shift in thinking is what allowed me to trade over $25 million across the last 3 years. Now, every candle answers 3 simple questions. Who pushed price? Did that push succeed? And how strong was that move? That's the entire language of price action. Every candle is built from 4 values: open, high, low, and close. The body shows where price ended, who controlled the outcome. The wicks show where price tried to go and was rejected. So you're not reading shapes here. You're reading behavior of the market. Every strategy you've ever seen is based on one assumption. Either if price is strong, it should keep going, continuation logic. Or if price fails, it should reverse, failure logic. Strategies don't fail randomly. They fail when the assumption doesn't match the behavior. So the real question becomes, what is price doing right now? There are only 4 answers. The first is expansion. Expansion is a continuation environment. This is when price suddenly moves further than it has recently. You'll usually see one candle that's clearly larger than what came before it. And that large is always relative to recent price action. What that tells you is simple. One side just took control decisively. Price accepted these new levels, new participants stepped in, and followed through is likely. This is not exhaustion, this is continuation. That's why breakout type strategies make sense here. Opening range breaks, momentum increases, shallow pullback continuations. If you try to fade a move like this, you're not being patient, you're betting against confirmed structure. The second environment is rejection. Rejection is failure-based. This is when price pushes into a level, maybe even breaks it briefly, and then immediately fails to hold there. You'll usually see this as a wick through a level that closes back inside. What that's telling you is simple. The breakout didn't work, aggression failed, orders absorbed, late traders trapped. This is where reversal logic makes sense. Failed breakouts, weak rejections, liquidity hunt reversals, fakeouts. Momentum has no foundation here. The third environment is progression. This is also a continuation environment, but it looks different from expansion. Instead of one big move, price advances in steps. It moves forward, pulls back a little, then continues again. Those pullbacks stay small. That tells you pressure is steady, not emotional. Each pullback tries to reverse and fails, and each move against the trend gets absorbed. This is where trade-based logic makes sense. Pullbacks in trend, break and retest setups, and continuation ideas. You're not chasing a spike here, you're aligning with sustained pressure. One quick note here, Elliott wave theory is one approach traders use to measure pullbacks through retracement percentages. This is also called Fibonacci retracements. Back to our fourth environment, balance. Balance is failure-based, and sometimes it's a no-strategy environment. Price rotates between the same highs and lows. Up, down, over and over, no progress. What that tells you is that there's no pressure building. Neither side is in control. Nothing is accumulating. That's why breakouts usually fail here. Continuation logic doesn't just struggle, it's structurally wrong. The price ranges, test support and resistance levels, smart traders do some scalp positions, but in the end, the best decision in balance is to do nothing at all. Here's the simple rule to remember: don't trade. Expansion or progression means continuation logic. Rejection or balance means failure logic. That's it, very simple. If you force the opposite logic, you're not unlucky, you're misaligned. This is why this is very important. When traders say, this strategy works sometimes but not other times, what they are really saying is, I don't know when this strategy is supposed to work. This framework answers that. You stop arguing with the market and start matching your ideas to price behavior. Price action isn't about prediction, it's about alignment. When the logic behind your strategy matches what price is actually doing, results stop feeling random, and trading starts making a lot more sense. That's the real edge. And one last note, a lot of traders struggle with price action because it's easy to overthink, I know. But one thing I found helpful is using AI as a learning tool, especially early on. I personally use Satoshi to help me make sense of price action. So if you want to check it out, I'll leave the link down below. If this video made things click for you, let me know in the comment section which environment you find yourself trading the most. And if you want more videos like this, make sure you subscribe and check my Web3 TV channel on the description. See you on the next one.